Bullish and bearish mitigation blocks are easier to find than you think. In this video, I will share with you very efficient price models for identification of mitigation blocks and order blocks. You will learn what is mitigation block. You will see real bullish and bearish mitigation blocks examples. I will show you how to draw a mitigation block, and I will explain how to use that in trading Forex with Smart Money Concepts SMC. Like this video, subscribe to my YouTube channel, and learn the essential ICT trading basics. Let's study classic bullish and bearish trend models in SMC trading. To confirm that the market is trading an uptrend, we need the price to consistently update higher highs and higher lows. We say that the market is bullish when we see at least one strong bullish impulse retracement with the formation of a higher low and a new bullish impulse with the break of structure and the formation of a new higher high. When these three simple conditions are met, we say that the market is trading an uptrend. To confirm that the market is trading in a downtrend, we need the price to consistently update lower lows and lower highs. We will need at least one strong bearish impulse pullback and the formation of a lower high and the consequent strong bearish impulse with the break of structure and the formation of a new lower low. When these three simple conditions are met, we say that the market is trading in a bearish trend. Now let's study in details a bullish trend model. In a bullish trend, the level of the last higher low will be a very important point. The fact that a strong bullish impulse initiated from that with the confirmed break of structure and the formation of a new higher high, higher close will confirm a strong buying pressure from that level. And we will also assume that that level will compose a significant and critical zone. We'll call that zone a bullish order block zone. We will assume that in future smart money will continue accumulating their buying orders there. I will explain how to draw that zone in the examples later on. As a bullish trend continues, the market will continue updating the higher highs and higher lows, and after formation of a new higher high, with the high probability we will see a retracement and the formation of a new higher low. Learn Smart Money Concepts Trading with my book. Learn SMC Trading Basics and Advanced Profitable Trading Strategy. For more info, visit my website, the link in the description below. The book is also available on Amazon. The point from where a new bullish impulse will start initiating will be our new potential bullish order block zone. If the price will not manage to update the high and will set a new lower high, then it will be a very important event. It will signify a potential change of the market sentiment. If the price violates our potential order block zone, it will be a very important event that will signify a violation of a current bullish trend and the start of a new bearish trend, a market structure shift. Our potential bullish order block zone will turn into a very important area that will be called a bearish mitigation block. After a breakout, it will turn into a very important resistance from where, with the high probability, the next bearish movement will follow. A bearish mitigation block will be a very safe zone for us to sell the market from. A formation of a bearish mitigation block will be a very important event that will signify two things: a violation of a current bullish trend, market structure shift, and the start of a new bearish trend. That is a complete model. Failure of the buyers to update a new high in uptrend and the formation of a lower high with the consequent breakout and the formation of a new lower low will signify a formation of a bearish structure and of a bearish mitigation block. A market structure shift and the formation of a mitigation block is not a random event. One of the most reliable things that will help you to predict a market structure shift and a violation of a bullish trend is a test of a significant liquidity supply zone. Here's your complete model for the identification of a bearish mitigation block. You will need a bullish trend model and a bullish structure first, then you will need a historic supply zone and the test of that, or a bullish liquidity graph above that. Then you will need a formation of a lower high, a breakout of the level of the last higher low with the market structure shift, and the formation of a new bearish bearish structure with a bearish mitigation block. Now let's study some examples. That's a textbook example of a formation of a bearish mitigation block on a pound-dollar pair. You can see that first the market was bullish, the market was trading in uptrend, and then the market reached a historic significant liquidity supply zone. After a test of that structure, the market formed a potential order block zone. And you can see that during this zone, we take the level of the last higher low as the lower boundary of that zone, and its upper boundary will be the low of the body of that candle. It is that simple. After that, the price went up, but it did not manage to update the high and set a new lower high instead. Then a strong bearish movement followed and the price violated our potential order block zone. That confirmed the market structure shift, and then the price formed a bearish mitigation block, the zone from where we could sell and from where the price dropped. By the way, please note that when the price tests a bearish mitigation block, very often we will see the market manipulations, and the market will try to stop you out from your trade before the price will drop. So be careful with the bullish traps after a test of a bearish mitigation block. Let's study another setup. On a pound Swiss pair, we can see that the market was trading in uptrend, and you can see that for quite an extended time period the market was bullish. Then when the market reached that high, something changed. You can see that the price retraced. We formed a potential bullish order block zone, and instead of updating a new high and going higher, the price set a lower high. Why it happened? If we analyze a historic price action, we can spot that the market reached a significant historic supply zone. You can see that after a test of that supply zone, the market set a lower high and our potential bullish order block zone was violated. This event was very important. It signified a violation of a bullish trend and the start of a new bearish trend. Our potential bullish order block zone turned into a bearish mitigation block. It was a very perfect zone to sell from, and you can see that after its test, after a bullish trap, we saw a strong bearish continuation from that. That is how you could apply that model for predicting a bearish reversal on a pound Swiss pair. Now let's study in details a bearish trend model. In a bearish trend, the level of the last lower high is a very important point. The fact that the market started a strong bearish wave from that, the fact that the price violated the current low and set a new lower low, lower close, indicates that large volumes of selling orders were accumulating around that level. That price level will compose a critical zone, a zone that we will call a bearish order block zone. We will assume that smart money were accumulating selling orders within that area. When the price sets a new lower low, lower close, and a bullish movement starts from that, the next bearish wave may start from a lower structure level than a bearish order block zone. The point from where a new bullish move will initiate will compose a potential bearish order block zone, and our new lower high will be there. If a new bearish wave that initiates from a new potential bearish order block zone fails to drop lower and update the low, it will be a very important event. If the price sets a higher low instead and returns to a level of the last lower high, it will indicate a potential bullish reversal. A bullish violation of our potential bearish order block zone and the formation of a new higher high will signify a confirmed bullish market structure shift. It will confirm a violation of a current bearish trend and the start of a new bullish trend. Our potential bearish order block zone will turn into a bullish mitigation block. That will be a critical zone from where we can look for buying. That will be the zone from where we can buy the market, anticipating a strong bullish movement higher. A formation of a bullish mitigation block will be an important event that will signify two things: a violation of a current downtrend, a market structure shift, and the start of a new bullish trend. That's a complete model of a bullish mitigation block creation. First, the market should be bearish, the market should be in a bearish bearish structure and trade in a bearish trend. The market should stop updating lower lows, and instead, after a formation of a potential bearish order block zone, the market should form a higher low. After that, a bullish movement should initiate and the market should set a new higher high, breaking a potential bearish order block zone. That will be a moment of a creation of a bullish mitigation block. It will signify a start of a new bullish trend, a violation of a bearish trend, and the confirmed bullish market structure shift. A bullish mitigation block will be your safe zone to buy the market from. Such a market structure shift is not a random event. One of the most reliable things that will help you to predict a market structure shift and the violation of a current downtrend is a test of a significant liquidity demand zone. When you spot that the market is bearish and trading in a downtrend, analyze historic liquidity zones. A test of a significant demand zone may trigger a bullish reversal. A consequent formation of a higher low after a test of a demand zone will be an important warning and will indicate a highly probable bullish reversal and the formation of a bullish mitigation block. Now let's check some examples. That is an example of such a price model on a dollar-yen pair. You can see that the market was trading in a strong bearish trend and in a bearish structure. Then the market tested a significant historic demand zone. After that, the price went up, formed a potential bearish order block zone, and dropped. But instead of updating the low, the market formed a higher low and then a bullish movement started. A bullish violation of our potential bearish order block zone signified a bullish market structure shift and the violation of a current bearish trend. After a breakout, our potential bearish order block zone turned into a mitigation block. And during that zone, by the way, I took the level of the last lower high as its upper boundary, and its lower boundary is based on the high of the body of that candle. After formation of a bullish mitigation block, the price tested that and we saw a manipulation and the liquidity grab below that, and then bullish reversal was confirmed and the market went way higher. And the price model that I shared with you would help to predict a bullish reversal easily. Look what happened with euro dollar pair. The market was trading in a bearish trend and you can see that over time the market kept updating lower highs and lower lows. Then when the market reached that low, we see a clear change of the market sentiment. Why it happened? The market tested a significant historic demand zone. After its test, the price went up, we set a new lower high, but instead of going lower and updating the lows, then the market set a higher low. Our potential bearish order block zone right here was based on the level of the last lower high and the high of the body of that candle. That is how we draw that zone. You can see that the price went up after formation of a higher low, and that zone was violated. That was an important event that signified a violation of a bearish trend and the start of a new bullish trend. Our potential bearish order block zone turned into a mitigation block, into a bullish mitigation block from where we saw a strong bullish continuation. And again, you can see that we got some manipulation here. We got a liquidity grab. Below that, after a liquidity grab, you can see how strong bullish rally initiated. A proper combination of structure mapping and liquidity analysis will help you to predict a market structure shift and the formation of a bullish or bearish mitigation block before they happen. The models that I shared with you will help you to confirm a bullish and bearish mitigation blocks trading Forex or any other market with SMC. Let me know in the comment section if you have any questions. Learn Smart Money Concepts SMC with my book. For more info, check the link in the description below. The book is also available on Amazon. Also, traders, please watch my other videos. I have a lot of videos about SMC in this playlist.